The S&P 500 for today is looking pretty good. Even though it's a red and down day to day, you can tell right here, our current price is higher than the close of Friday's price. Friday we closed at roughly $64.81 and we're currently nearly $11 higher than Friday's close. For today, we have around 15 stocks that we need to take a look at that we received sell alerts for. The first one we're going to look at is Uber, U-B-E-R. All right, what do we have? We had a cross on Friday. We had a cross of the fast-moving average crossing over the slow-moving average on Friday, but we do not have price continuation continuing down. So we will not be selling any Uber today. We will move on and take a look at our next stock, which is American Express, which is AXP. American Express on Friday, we had price move below our fast-moving average. We do have a continuation down. Now, I currently have 4 shares, so I have all 4 books, each with 1 share. So we're going to sell 1 book, 1 share. We're going to sell that at the current price, hopefully at $325.60. So at $325.60, we just sold a stock that I bought at $321, so we'll just call it $5 profit on that one. All right, now we will move on to Bank of America, which is BAC. We clearly are in a downtrend for now. I have 4 books with 4 shares each, totaling 16. So I have all my books. We currently have a sell order for 1 book right now. So we will be selling 4 shares at $49.30. So I just sold from $48.54. That is roughly a profit of, we'll round now that to 70 cents with 4 shares, which is $2.80 profit on Bank of America. Next is Berkshire Hathaway. It's BRK/B. We had price cross below our fast-moving average on Friday. We have a continuation down. I currently have 4 shares, and that's 1 share for each book. So we're going to be selling 1 stock. And I purchased 3 shares at $485. So we just sold 1 share at $494. And that is, we'll say that's a $9 profit on the sale of that 1 share. So that's a fairly decent profit on this swing trade. All right, next is Delta Airlines, which is DAL. We had price cross on Thursday, but we did not have continuation, and we still do not have continuation of this particular cross. And now that price has moved back up above the fast-moving average, we're going to cross this off of our list, so we will not be looking that. I'm looking at all of the triggers that triggered to all the alerts that were sent today. And that's 15 of them. So we've already done 5. So we have roughly 10 shares left to take a look at. Next is Goldman Sachs, which they've been moving up today. I must have been thinking of another stock. This is moving down. Unless I had seen the price moving up from the low point, that's a possibility. At any rate, we have price on Friday moved down below our fast-moving average. We do have continuation today, continuing that price move down. So we're going to look to sell 1 share of Goldman Sachs. The current price is $737.99. And I will be able to sell 1 of the shares that I own. So we're looking to sell 1 share. I currently have 3 shares, and I max out with 4. So we'll be looking to sell 1 share at $737.99. And that went, and I sold a share that we bought at $736.03. So we'll call that a $2 profit. Okay, we're moving now to Howmet, which is HWM. Howmet, that definitely is not a sell. Maybe this was triggered Friday. We received an alert today because it was triggered Friday. And the alerts aren't sent until the next day after the close of the candle is when my alerts are sent. So we received it this morning, but we have price is well above our fast moving average. So we will not be selling any HWM. We're going to next move on and take a look at IBM. All right, now IBM, clearly we should not be taking a look at IBM. This is all up. So maybe I wrote something incorrectly on my list that I created this morning. So the next one we're going to move to is IWF, which is an ETF for the Russell 1000. And the Russell 1000 are the top 1,000 small cap stocks. All right. So this morning we received an alert for the trigger that activated on Friday. However, we have price moving the opposite direction of the trigger itself when price moved below the fast moving average. So we'll move on to JP Morgan, which is JPM. Now here we clearly had price move down on Friday past both of our fast moving averages and our slow moving averages. However, this continuation, I am not counting for both of these crosses. We're only looking to sell one share as long as our purchase price is higher. So the current price is $292. And nope, all of the stocks that I have of JP Morgan were purchased at a higher price than this. So we're going to be setting a sell order. And we're going to be setting a sell order for 2 shares. So when I was saying that this continuation only counts as the cross across this fast moving average, I was hoping that all of our purchased shares were at a higher price. So the reason I would only be using this as a continuation on 1 share, because it's quite possible that tomorrow price can move up on us. So a big move like this usually doesn't necessarily mean that we're now in a long downward trend. We don't have any really news that would support a long downward trend. Quite the opposite. We have news that price shouldn't be going down for any length of, a long period of time. We shouldn't be going down for several days or weeks. So at any rate, I used the cross. When we have one candle cross both of our moving averages, I only look to sell 1 share. But in this case, we're going to be setting a sell order for 2 shares. Because we're going to count this now when we're selling shares, when we're at a loss, or when price is lower than our purchase price. I do count both of these crosses, and this is a continuation of both crosses. So we're going to set a sell order for 2 shares. We have cross 1 and cross 2. And our purchase price for the first one was, for both of them was $297.98. We're going to take the 10% of the hundreds place, which is 20 cents, and we're going to add 20 cents to our purchase price of $297.98, and that's going to be $298.18. So our sell order for these 2 shares is $298.18. Good till cancel. Extended hours, confirm and send, and there's our sell order for JP Morgan. The next one we'll take a look at is MasterCard, which is MA. Same thing, we had price move below both moving averages, both the fast and the slow on Friday. We do not have price continuation down. We have price turned back around, and our price is currently higher than the close on Friday. Had this been a red candle like the previous example before, I would be looking to sell only 1 share just in case price turns back around. I don't want to just sell out when there isn't any news or any large geopolitical information that actually supports this. There's no big news on MasterCard that should substantiate this decline. When there's no news and there's nothing to support this, this is usually the market makers and the big banks moving it, and they're looking to, they're making profits. Hedge funds as well, big institutions. When you see a move like this and there's nothing to support it, there's no negative news of MasterCard. Quite the contrary, the news that we received on Friday is actually supportive of any type of bank institution, including credit cards, financial institutions, of going up because of the possible rate change in interest rates. And I believe that it's supposed to happen sometime next week. So since we're passing MasterCard, we're now moving to McDonald's, which is MCD. All right, we had price move below our fast moving average on Friday. We have continuation of that downward move. Current price is $3.11. However, all of my McDonald's are purchased at a higher price, so we'll be setting a sell order. So we're looking to sell 1 share. I currently have 4 shares, so all 4 books are maxed out with 1 share each. I purchased, the least expensive that I purchased McDonald's for is $3.16.32. So we're going to take 10% of the 300s place, which is 30 cents. Adding 30 cents to our $3.16.32 is $3.16.62. So $316.62 is our sell order. We're good till canceled and extended hours. Confirm and send. And there's our 1 share. Waiting there to be sold if this price happens to spike up before it continues a longer downward trend. And if you've watched my videos before, it doesn't matter if it doesn't spike up and capture this sell order. If price just continues down, we'll just hold on McDonald's, because over the long run, unless something tragic happens here in the United States, McDonald's will probably go up over the long run, over the next years and decades. So the stocks we sell, if you're new to my videos, the stocks that we trade, swing trading here, are stocks that I hold or plan to hold for decades. However, when I say hold, I don't mean just to hold them. I'm not a buy and hold trader. I chose roughly 200 stocks that I'm looking to hold, in air quotes there, for a long term. However, if price turns around, when I'm able to make profits, I will sell. And then when price turns back around to head back up, that's when we'll buy back in. Again, these are quote unquote long-term holdings. All right, so for that, now we're going to move down to Royal Caribbean, RCL. Cruise lines have been doing fantastic. So we had price move down on Friday below our fast-moving average. We are still below our fast-moving average. However, this is not a true continuation. Price is higher than the close on Friday. So I'll take a look at how much I purchased some shares for. This is current price at $3.53. So we're $10 higher than the price in which I purchased 3 other shares. We're maxed out with 1 share per book. So we have 4 shares. So I will wait until tomorrow to see if we have a true continuation down. But the both Royal Caribbean, Norwegian, Carnival Cruise, they have been doing great. They're booked for the next 2 years already. Royal Caribbean, as a matter of fact, just launched their largest ship. It's the largest cruise ship in the history of cruising. And I believe there's already a waiting list of 2 years for those cruises have already been sold out. So I do not expect this downturn to last. And because we do have price moving up, we are not selling. So we will always wait and let the market and current price tell us whether we should be buying or selling. So we are now going to move to Targa, TRGP. All right, we had price move below both of our fast and slow moving averages. We have a continuation. Now I know my current price that I bought is higher, so we're going to set a sell order for half of the shares that we own, which is 8. So for Targa, for TRGP, I max out with 8 shares, so that's 2 shares per book. So we're going to sell 2 shares, 1 book, for the price crossing the fast-moving average. We're going to place a sell order as well for the pricing moving across our slow-moving average. So that's where we get the 4 shares. And I am not going to set any more sell orders on video. I'm trying to make my videos shorter. So I've already shown 2 sell orders. They run the same. And I'd rather show you the process on why I buy or sell stocks. So I'm going to go make that sell order now. Now I've had these Targa shares. I purchased these back in 2024, actually. So I've been holding on to these for a while, which is no big deal. Like I said, I pick stocks that are part of my long-term investment strategy. I plan on holding these for years, and many of my stocks that I have pay a dividend. Targa pays $4 a share. So while we're holding it, we're still collecting some dividends. So it's not a complete loss or drop in portfolio value, at least for this particular stock anyway. All right, we'll now take a look at a financials ETF, which is XLF. Well, we had price move down below our fast moving average, almost crossed completely past our slow moving average, but we crossed our fast moving average. We're now lower. We are lower. Maybe, maybe not. Let's see. We closed on Friday at 53.07, and our current price is $53.09. All right, price just dropped 53.07. So I'm just going to go ahead and sell. We have 24 shares for this ETF. I purchased 6 shares, so we are maxed out. Excuse me, 6 shares per book. So our 4 books are maxed out with 24 total shares. So we're going to look to sell 6 shares at try $53.07. And from $53.07, I did purchase 6 shares at $52.88. So there is roughly a 30-cent profit on those 6 shares, which is $1.80. All right, the last one on the alerts that were sent today is UDOW, which is ETF, tracking the Dow Jones Industrial Average. Oops. UDOW. All right, we had price fall right here below our fast moving average on Friday. However, price is not continuing down. Price is higher, so we do not have a continuation of this move. So we will not be selling any UDOW. We do have 2 stocks left over from last week from we had some moves and we weren't able to buy, or price did not continue down. So we want to make sure that those are still valid or not valid price triggers. SOFI, SOFI. All right. So this is from last week. However, I will cross this off of our list. Don't need to continue to look at this again. So the next stock we need to look at, and the last one for today for our sells, is SPXL. This is a triple leverage ETF linked to the S&P 500. We had price move down Friday. However, it's higher today, so I will cross that off the list as well. That no longer needs to be on our list. And we are up to date on all of our possible sell orders, sell triggers, sell alerts. It is now time to move over to our buy list. On our buy list, we received 6 possible buy alerts today. So the first one we're going to take a look at is the Tradestor, TTD. And we are not going to do anything. We do not have a true cross. If this was a cross, if price happened to be a little bit higher than our slow moving average, if they're on top of each other, I neither buy nor sell. I need a clear gap in either direction. I need a clear gap. So like this particular cross on this day, I might not have purchased. I would have waited until this day when we have a clear gap of the fast moving average above the slow moving average. And the same thing in this particular case, I would wait until there's a clear gap. So since there's no gap, I do nothing. I want to make sure that price is one direction or the other from the slow moving average. So we will not be doing anything with that. We'll just have that on our list to look at tomorrow. So the next is Monday, MNDY. All right, so are we coming out? Are we now turning around? We have the RSI moving up. It's up in the range. It's out of the oversold range of the market of the RSI. We have the MACD, both indicators, both the signal line and the MACD line are headed up. However, they are still below the midline of the histogram. We do have velocity of price moving. It's been steady here for 1, 2, 3, 4, 5, 6 days now. We are going to take a look at our 3-month chart. We're going to take a look at that, our monthly chart, excuse me. And we are in a downward trend. So even though this month we are in an upward trend, we've been going down for the previous 2 months. So we will not be purchasing Monday. One reason is, one, we have price below our slow moving average, and it's also below our fast moving average. And if you're new to the videos, I typically try not to buy anything if on our monthly chart price is below our fast moving average. So we're going to move on. We're actually even going to take this off of our list. We don't need to look at that tomorrow or later this week. We're now going to take a look. We'll move back over to our daily chart right here. 3 month and 1 day. So this is a 3-month chart on a daily candle. We're going to move to Howmet, which is HWM. This is a mistake. HWM should not be on our buy list. That clearly was on our sell list earlier, so that's a mistake, another mistake I made. So the next one we're looking at is Broadcom. We had a big move on Friday. Broadcom had earnings on Thursday, so it was actually Thursday afternoon. They had gone up $12, but by opening the next morning, they had gone up to $334 from a close of $306. So we're looking at roughly, we'll just call it $24, or rather $28. Yeah, 28 is a little bit more accurate guess. Well, not actually guess, a little bit of possible quick math. Now, I currently have 10 shares, which is one book. Broadcom is a semiconductor stock, right there, a competitor with NVIDIA and AMD. Semiconductors are what's driving the AI growth, artificial intelligence, and will be for the next several years. So I want to take advantage of that. So this is well significantly above the minimum amount of money that I want to spend on a share of or a stock. Under normal situations and circumstances of my strategy, I would max out at 4, but I don't want just 4 shares for this move that we're going to be seeing over the next several years. There's not a lot of stocks that I'm significantly by an extreme amount overweight and by purchasing, but Broadcom is one of them. So I currently have 10. We're currently lower than the purchase price. However, when we have a move like this based off of earnings, and it's a substantial move like that, I will not just max out my purchases. Normally, when we have a fast moving average crossing the slow moving average, I don't max out at that. That's when I want to max out, but I don't want to max out when I have a cross at earnings. This is a significant move. So over the next several days or weeks, it's quite possible that many people who were holding, possibly holding back here, might start to take profits. And over the next several days or weeks, we can actually see price continue down. Just as it opened up lower today, however, price did ultimately reach a high of $355. However, it's almost $10 lower. And tomorrow might be a similar story. We might open lower and move higher, and the day after. So we might just continue in a downward trend. So I'm not going to buy any additional. I'm happy with the 10 shares I have. I do have those purchased. I purchased those today, part of my day trading strategy. So for now, we're going to leave Broadcom alone. If price turns back around and starts going up, then I might buy back in, depending on how much money I have available. So this would be $3,400, and I'm at $3,800. So we might have some better opportunities to buy. We want to maximize our potential profit that we can make by purchasing some shares that we know are clearly telling us that there might be in a short-term uptrend. So we have, the next one we're going to look at is Builder, BLDR. All right, we had price move above on Thursday. Price moved above our fast moving average. We had a continuation of that move on Friday. And for some reason, that did not make my list. If I received an alert, that didn't make my list on Friday. However, today, we do not have continuation of this cross and the move up. If we did have continuation, I would be buying Builder right now, but we'll wait until tomorrow and see if prices changes direction. We do have the MACD. We do have the signal line moved across the MACD line, and both lines are above the midline of the histogram. So that's good news. That's a pretty good indication that price might actually stay above and moving up for a while, but we'll wait until price actually indicates to us that price is moving and going to be in that trend. So the last alert that we received today is for Twilio. And didn't we already look at this for a sell? I can't remember, but I know this looks very similar to one we just saw earlier. So we have price moving across several days ago on Thursday across our slow moving average. However, I want to take a look and see what our monthly chart on Twilio was. So we currently have our price below our fast moving average. I do not particularly care to buy any stocks when price is below the fast moving average on our monthly chart. So we're going to go back to our daily chart. I currently already have 4. If I didn't have any stocks at all, so Twilio, I max out with 8 shares. So each book would have 2 shares. I would buy 1 book. If I didn't have any books whatsoever, it's possible that I might. The only time I'll buy is any stocks when price on the monthly chart is lower than the fast moving average. It's possible, depending on the news, the economic outlook, and what the MACD and the RSI look like, I might buy 1 book, but not today. So that is all the alerts that we received today on our buy list. All right, with that, now we're going to start taking a look at last week's possible buys that we did not do any purchases of because either we did not have continuation or we just didn't have enough money to purchase them. So the first one we're going to take a look at is UI, Ubiquity. And one reason we didn't buy it because price is significantly higher than our fast moving average. And I'm waiting or possibly hoping that price will turn back around and come down over the next several days closer to our fast moving average. That's a $30 difference there, that's a significant move away from our fast moving average. You can see here we had price away and it ultimately came back to our fast moving average. We had price move away. Well, this one fell. So let's find another. We had price move away from our fast moving average and came back down, touched it, and it slowly went up over time. So that's really the best example here on our 3-month, 1-day chart. And this is a significant move from our earnings. So it's just rocketing up. I'd like to get into it, but I missed the opportunity back here. I probably didn't have enough money to purchase Ubiquity sometime last week, which is why I didn't buy it here when it actually did come back down to the fast moving average. And that would have been great if I had been able to get in. That would have been a $70 gain right there for each share that I would have purchased. So we'll leave that on the list and we'll take a look at Johnson & Johnson, J&J. All right, Johnson & Johnson, we do not have continuation. We actually have price moving down, fell down below our fast moving average. So we will now cross that off of our list since price is actually lower than our fast moving average. And the next one we're going to look at is Disney, DIS. Okay, we had price move across on Thursday. It did not continue down. It reversed. And we had price move below our fast moving average, and we do not have a continuation of that move. We have price moving back above our fast moving average today. So here, Disney has been consolidating since August 22nd. So we're looking at 10 trading days here. They did have a pretty decent earnings. You can see the move from the earnings. However, they're in consolidation. There's no immediate news. There's no great movie. There's not an expectation for Disney to be putting out any great movies in the next several months. They've had a horrible track record with their movies here recently over the past couple years. So this consolidation is basically the Bulls fighting the Bears. I'm currently not in. We have no shares. We did not buy back here at the cross. One reason is we just, when it crossed, we just didn't have enough money to buy stocks. All of our money was already invested into other stocks. So I am not going to be purchasing today. Now tomorrow, if we have a continuation of this cross, then I'll buy back into Disney then. Now I have been a previous owner of Disney. We made some money on that. We actually sold back here at this cross. All right, the next stock that I know has actually been moving is IBM. Come on now, IBM, enter. There we go. All right, so IBM, we're going to take a look at the monthly chart just to see where price actually was. We were in an extended, so we had a cross back on July 14th. So we were in a month and a half of downtrend. So it's quite possible that our monthly chart may not be providing us information that would benefit a purchase at this time of Disney. So here we are, we're right at the fast moving average of IBM. So right here, price currently is probably slightly above, arguably, but we are in an overall uptrend. For whatever reason, we had price move down 2 months ago, moved down last month, but we are in a pretty decent move now. However, we do have the velocity of price is slowing down. So for the past several months, even though we are in an upward trend here, we aren't showing really any significant velocity. Now this bar won't actually appear until this actually closes. So, but the previous 2 months, they clearly correlate to this price move. We do have RSI turned around. You know, if IBM was actually, if they fabricated their own chips, then maybe I would purchase, but they don't fabricate their own chips anymore. We're going to go back to our 3-month, 1-day chart. Even though it's moving up, if price continues to move up over the next several days and we have both the signal line and the MACD line cross our midline histogram, maybe I'll buy 1 share. Let's see, IBM. Yeah, I max out with 4 books, each having 1 share. So we're going to pass on IBM. However, we'll leave that on our list. All right, another stock we're going to take a look at from last week is McKesson, MCK. All right. Now we had price move about a week and a half ago across our slow moving average. However, we did not have price continue up. Price when it crossed, price was lower. So we had to wait until price moves across our fast moving average. And then we waited for continuation, which we did. However, last week, I did not make any purchases of this because our 3-month chart wasn't running congruent with price action here. So if we take a look at our month, I said 3-month chart, I keep saying that. Our monthly chart, we had price move below our fast moving average on the monthly chart, and we actually opened lower than the price of our fast moving average. So I did not purchase anything last week, and we currently have price above our fast moving average. So we're going to go back to our 3-month daily chart. However, we do not have a strong price move, letting us know as investors that price is currently in an upward trend. It's been consolidating for 1, 2, 3, 4, 5, 6, 7, 8. We'll call it 9. And we actually were at a higher price. So we're actually lower than we were almost 3 weeks ago, 3 trading days ago. Excuse me, 3 trading weeks, which is 10 days, 11 days. So I'll stick with the 3 shares I currently have. If I was maxed out, I'd have 4. So I'm already 3/4 of the total shares that I would have if I was maxed out. And those were purchased at $730. So we're roughly $40 lower than our purchase price. So we'll just stick with the 3 that we're currently holding, and we'll wait until the bulls are either showing us that the bulls win and price will be moving upward. So we'll leave McKesson on our list, and we'll just keep taking a look at that every day. So we'll take a look at Home Depot, which is HD. Now, they've been on a great trend upwards since July 25th, with the news last Friday that we're more than likely going to have a rate reduction in interest rates next week. I'm going to go ahead and buy Home Depot. Now, at Home Depot, I typically have 1 share for each book, but I'm not going to max out right now. I like maxing out at the cross. That might be the beginning of an upward trend, but since we're so close or so far away from this particular cross, I will only just buy 1 share of Home Depot. So we're going to drop that down to 1, and we're going to hopefully purchase it at 420.20. And we did. So there's our Home Depot, 1 share. Hopefully it'll be good news with the market next week. if and when we do get that interest rate reduction and the market decides to move up, we'll capture that. But many times the market moves the opposite direction of what we will expect when we get news. So that's another reason I don't want to max out, is you never can tell what the market's going to do when news is released. Just because it's good news doesn't always mean that price is going to go in the upward direction. Another one from last week we're going to take a look at is Aristanet, which is A-N-E-T. A-N-E-T. All right. So Aristanet, we do have a cross of the fast moving average above the slow moving average. We do have, it did move significantly above the price at the cross, so that was a continuation. However, went down that day, so I did not buy on Friday, and we have a price move continuing downward. So we're not going to be buying an Aristanet today. We'll leave that on our list to take a look at tomorrow, and we'll make our decision then. All right, so that takes care of all of all the buys that were on our past list that we didn't do anything with. So that is all we have for today. There's no more sells. There's no more buy alerts that we need to take a look at. We're going to go back to our S&P 500 chart, the SPX. And since we started the video, we had a little bit of price move upward, so that's good. And we're still higher than yesterday's close, so that's also great. All right, so we'll take a look at what we did for the day. We sold American Express, Bank of America, Berkshire Hathaway, Goldman Sachs, and the ETF XLF. We put in sell orders for JP Morgan and Targa, and we bought Home Depot. So if you've been watching some of my videos, you just saw, hopefully, that you can see that I'm making profits, and hopefully this inspires you to possibly get into the markets and maybe even make some of the trades I'm making. You're more than welcome to follow me. I spend hours and hours every day looking for stocks to buy and sell, and I do this to make it easier for you to possibly make money as well. Just keep in mind, this is a long-term strategy. This is not a get-rich-quick scheme. All right, so let's take a look at what my trading results were for the day. And here we are. For today, I made $818.21. Roughly $150 of that is from the actual swing trading strategy of selling the stocks. Actually, no, I'm looking at the numbers. It's closer to $70. So close to $70 in the swing trading strategy. The rest is day trading. So our portfolio in this account, the new account, is $2.12 performance year to date compared to the S&P 500, 1.18% performance. So we are performing at 0.94% better. We're almost 1% better than the S&P 500. Now, the old account, we're sitting at 16.26 year to date prior to the transfer of all the funds, and the S&P was at 10.54. When we combine the old account with the new account, we're looking at 18.38% performance for my portfolio compared to the S&P 500 at 11.72% year to date. So even though this may not be the best number in the world, we are performing 6.66% better than the S&P 500. So there is our current earnings for the day and our year-to-date performance. And if you saw the thumbnail, you saw that AppLovin and Robinhood are both up, and they're both going up mainly because they're being added to the S&P 500 on September 22nd. So if you're not in either one of those, it might be a good opportunity to take a look at those and possibly buy some of those stocks. For me, specifically with Robinhood, I am maxed out with my 4 books with 3 shares each, so I've got my 12 shares. But for AppLovin, I would be maxed out with 3 more shares, and I might buy those tomorrow just to be at full capacity. But with that said, we are done for the day. And I hope you all have an amazing rest of your Monday afternoon.